Shares of non-banking financial companies rallied sharply in trade today after the Reserve Bank of India reversed its earlier decision to increase the risk weight on bank loans to NBFC companies. This move will free up significant capital for banks and NBFCs. Among the top gainers, Bajaj Finance was one of them. CreditAccess Grameen, Bandhan Bank, AU Small Finance Bank and Fusion Finance along with other microfinance lenders' shares jumped up to 18% in trade as the RBI stated that the microfinance loans in the nature of consumer credit would be risk-weighted at 100% instead of 125% earlier. Shares of telecom operator Bharti Airtel edged up in trade today after the company confirmed merger talks with Tata Group to explore a deal merging Tata Play's DTH business with its subsidiary Bharti Telemedia. This potential consolidation has sparked investor interest in the telecom sector. SRF shares rallied by about 3% on robust brokerage reports, forecasting a strong outlook for its fluorochemicals and specialty chemicals segments. The firm stated in its analyst day that the worst was over for all of its sectors. Shares of Inox India jumped up about 13% in early trade after the company announced that it became India's first cryogenic equipment manufacturer to receive a precious IATF certification. This award, given after a comprehensive audit of its factory in Gujarat, has significantly boosted investor confidence. Among sectoral indices, Nifty Auto, Nifty Realty and Nifty Media indices were among the worst hit today, falling up to 2%. The auto index fell about 1.5% in trade after 2 days of gains, dragged down by Mahindra & Mahindra, Tata Motors and Bajaj Auto, which declined between 1 and 2% respectively amid a weak market sentiment. Prestige Estates shares was the top loser on the Nifty Realty Index, crashing nearly 5% following IT searches at the registered office and other branch offices. The shares of Raymond, Mahindra Lifespace Developers, DLF and Godrej Properties also dropped over 2% each on the Nifty Realty Index today. UltraTech Cement shares tumbled 6%, the steepest fall in about 3 years after the company announced an 1,800 crore rupees capex to enter the wires and cables segment. This strategic diversification move unsettled investors amid a volatile market sentiment who believed that UltraTech Cement should be a pure-play cement business. Cables and wires players such as KEI Industries and Polycab India shares sank up to 17% in trade, while Havells India fell about 5% as UltraTech Cement announced its foray into the cables and wires segment. According to domestic brokerage Motilal Oswal, this entry could pose a threat to the valuation multiples of cable and wire companies.